Today we bucked the trend. Today we are going against the trend. So good start. That's the limited point I want to say. Harsha Upadhyaya joins us. Harsha, good morning. Thank you for joining us. It's been a tumultuous start to 2025. I look on my right, Western world, it's tariff. I look up, I say China. I look down, I say fall in India. What is happening, sir? Look here, look there, everywhere it is pain and confusion.
Good morning, Nikunj. I think you are right. I think the scenario has changed quite dramatically over the last couple of quarters. There was always overvaluation in Indian market compared to its own history as well as compared to some of the other global markets. And what has hurt us in the last couple of quarters is the fact that the overvaluation seems to be a little overdone given the deceleration in the earnings growth that we have seen. And at the same time, too many policy changes or flip-flops that we have seen from other economies, which could have impact India as well. And this scenario of unpredictability is what has led to volatility in the markets, I guess.
So are things looking better now? Do you think we are reaching what could be called as fair value?
In the very short term, clearly markets are oversold. However, if you look at the valuations from a historical perspective, only the large cap segment at this point of time seems to be at fair valuations. The mid and small cap basket is still at a premium to historical valuations. So to that extent, while we may see some stabilization in the short term, the eventual moves would be dependent on how the earnings recovery happens and also where we finally settle on valuations. If somebody is a long-term investor in large caps, I think the current valuation is something where they will not really see too much of valuation risk going forward. But same cannot be said on mid and small caps yet.
Can you give us an example? When you say small and mid cap stocks are still expensive, what is the basis of this analysis?
One, compared to their own history, they are still at a premium of 20 to 30% at the index level. This is based on the last 7 or 8 years average, wherein a lot of money has flowed into mid and small cap basket. The funds have had different categories drawn out, and to that extent, the definition of mid and small cap has become very clear. Assuming all of this new reality will continue in terms of flows, in terms of the definitions that have changed, etc. Even if you take that average, the current market valuation is 20 to 30% premium to that. And we are not even talking about the long-term average like what we see for large caps. For example, when we say long-term average for large cap valuations, generally we talk about 10-year, 15-year average. If you take that, probably mid and small caps are still 50% premium to that history. I'm not even going into that longer history. Even if you take 7-8 year period, clearly there has been a premium to mid and small caps even at this point of time. And in terms of earnings, especially, the expectation at the beginning of financial year 25 was mid and small caps would grow at 25% plus kind of earnings CAGR, whereas large caps were showing somewhere in the mid-teens, right? Now, both the baskets have started to decelerate in terms of the earnings growth. It's very, very muted earnings for large caps. And there are several small caps and the index as well has shown degrowth in earnings. And the prognosis for next couple of quarters is also not very strong. So given all of this, I believe the current valuations on mid and small cap, despite the correction that we have seen from the peak, is still at a higher level.
All right, but Harsha, within the large cap space, tell us about the sectors that you are betting big on, and given the recent fall, where are you finding opportunities?
Clearly, there are no large sectoral bets at this point of time. While the market has corrected, as we had mentioned earlier as well, this has fallen from higher valuation levels to fair range of valuations. So which is very difficult to see too many sectors offering a very large amount of valuation comfort. If at all there is one basket which is offering a lot of comfort purely on valuations is the large cap banks, both private and PSUs. Other than that, there are some smaller sectors which are looking better where we have overweight position. For example, after a period of consolidation and a down leg in specialty chemicals, we are seeing a little bit of upturn during this quarter. And we believe that most of the negatives are priced in, and we should be able to see better volume growth as well as pricing growth going forward. So that's one of the smaller sectors where we have an overweight position. Industrials is again looking reasonably okay because there has not been too much dent in terms of the earnings trajectory. Yes, valuations were expensive. Now, most of these stocks have corrected nicely over the last 2 quarters. So to that extent, one could take a little bit of selective bets within industrials. And probably some of the other smaller sectors like telecom, cement, etc., offer good support in this kind of a market.
There's a one big change, Harsha, which has happened. That one big change is the RBI has pivoted from a tightening to a very loosening is not the right word, to a very benign kind of a regime. How will that change life for NBFCs? How will that change life for MFIs? How will that change life for banks? And do they become a buy now?
Nikunj, clearly large cap banks is something that we have been liking for quite some time. And as you rightly mentioned, I think the regulatory concerns that were there in terms of some of the tightening of the rules, etc., have started to ease a bit. We are also likely to see better liquidity conditions going forward. And also globally, with yields coming off, there is some support for Indian interest rates also to go down. So given all of this, I think it's going to benefit some of the lenders gradually. However, from a valuation perspective, we still prefer large banks over NBFCs. In case of NBFCs, we are betting on diversified businesses rather than single vertical businesses because some of these single vertical businesses have higher level of risk at this point of time. For example, MFI. So that's what we are avoiding at this point of time, but keeping our bets on some of the large banks as well as NBFCs, which are diversified in nature.
Okay. There are a couple of themes within financials which also are worth revisiting. One is insurance. Second is this entire capital market play. Third is, wealth managers. What else do you like in this space, which is largely termed under the financial bracket, but also is a very separate niche category? But there are also separate niche categories.
Within the other segment of banking and financials, we prefer some of the capital market intermediaries, although valuations remain high, and we have seen some bit of correction here. But we do believe that from a medium-term perspective, there is a long runway for growth. And that's what excites us. As far as insurance is concerned, clearly the growth is not so exciting at this point of time. And also we are expecting some regulatory headwinds to evolve over a period of time. So to that extent, we have been betting on banks rather than insurance plays at this point of time.
Okay. So Harsha, just to recap the setting on the table, markets are looking oversold, so 5-7% bounce here or there could come. But barring that, we should not expect a great 2025. I mean, can I say that?
I think large caps can still offer reasonable returns over a period of next 1 year is what we think. Because the earnings trajectory seems decent at low double-digit kind of earnings growth expected. If there is no dent to that expectation, I think large caps over a period of time should give reasonable returns. And also what's happening on the crude side is definitely positive for Indian corporates. With a lag, we should see some benefits flowing into margins, and that should help overall earnings growth as well. So overall, we are not so negative on large caps at this point of time. There could be a period of consolidation, but eventually, I think markets will follow earnings growth, and that's where we believe there will be at least low double-digit kind of earnings over the next year.
All right. Harsha, I remember when the last time we interacted, you were not sounding that bullish on the auto space particularly. And now that we are seeing almost a 50% correction in most of these major OEMs, do you believe that this is a space where do you once again have the valuation comfort, the growth picture looks attractive, and are you changing your stance within the auto space or still believe that it could underperform?
Valuations have definitely got reset. To that extent, there is a little more comfort on the valuations. However, from a very short-term perspective, we are unlikely to see any great change in terms of the demand trajectory. Most of the segments have been seeing muted growth in terms of volumes, and also there is a reasonable inventory that has built up in the pipeline. So to that extent, next couple of quarters are very unlikely to throw up major improvements in terms of the trend that we have seen. So to that extent, again, just like most of the other segments of the market, it could be a phase of consolidation even for auto stocks in general.
Okay, so Harsha, just to wrap it up with some final thoughts here. Small and mid cap nahi lene ka, large cap lene ka. So be lazy in large cap, be choosy in mid cap, and avoid the crazy small caps, right?
Yeah, by and large, I think that should hold good, given the fact that
Like my line, would you like to say it?
the fundamentals have not really turned around for all of the small caps. And given that we had seen 4.5 years of a large amount of outperformance of mid and small caps, largely driven by superior earnings growth, that is unlikely to come through. And if that is true, then why do you need to pay higher valuation for that basket and significantly higher valuations as compared to their history? So that's where I think one needs to be very, very selective in mid and small caps.
All right, Harsha, with this, we'll let you go. And thank you so much for taking the time out and speaking with us this morning.